Let's welcome on board then Nilesh Shah, who's now joining in on the show, MD at Kotak AMC. Nilesh, hi there. Good to have you on board. Let's talk about the elections and the market, given the kind of correlation that we have seen for the last 5 consecutive Lok Sabha elections. Just a month before, we've seen the Nifty rally between 3 to 21%. Now that there's more clarity in terms of the dates, what's your assessment?
So this time, I think market has already discounted continuity of government. Market is also discounting more big bang reforms rather than incrementalism, and which is why our markets are today trading at probably one of the highest valuation over the peer group. We today trade at much higher valuation than what we enjoyed over our peer group. Partly it is function of our doing well, and partly it is also a function of expectations that will continue to do better.
Nilesh, hi, morning. In the backdrop of it all, in terms of what lies ahead, we've also had a big shake-off all through last week, right? I mean, of course, the regulators' steps to bring in more transparency into the system has had its repercussions on, overall market and especially on the small and mid caps. Do you sense there could be some more pain in the system before we have a shake-off of the weaker hands, if you will?
So, Aisha, there are two parts of the market. One which is fundamentally driven, albeit optimistically priced. These are large caps, larger mid caps, some of the small caps. Essentially stock where there is enough floating stock for market to determine fair value. As I mentioned, this part of the market is expecting India to do well, and hence it is optimistically priced. There is a segment of market where prices are way ahead of fundamentals, not because those companies are expected to do well, but because there is very, very limited floating stock. This floating stock is concentrated in the hands of few people, and which is why limited buying is resulting into prices going higher. This builds momentum. There are crores of retail investors who believe what has gone up yesterday will also go up today. They jump into the bandwagon only to get the experience that making money is not easy. In that part of the market, I think in absence of fresh, gullible investors, we might see correction going ahead. Eventually, there will be definitely a correction. But on the part of the market where prices are discovered through market functioning, through market mechanism, I see limited downside, and eventually there will be upside.
Nilesh bhai, good morning. Thank you for joining us. Nilesh bhai, is it a good idea to take a very generalized market cap view on stocks? Because it is small cap, it is expensive. Because it is large cap, it is cheap.
Nahin, Nikunj bhai. Broadly, each company will move based on their fundamental. A small cap company with good governance and better future growth prospects will definitely get valued at a far more than a large cap company with limited growth prospects and a very bad governance. But at the end of the day, on an average, it is fair to assume that small caps will have higher volatility in their earnings. There will be concerns on their corporate governance, and hence, as a group, they should trade at a to large caps. Now, every rule has an exception. There will be periods where small cap based on growth and governance can trade at premium to large cap. At the end of the day, stock market is function of how individual companies are built.
Okay. The other question is whether it is a hint from the regulator or perhaps an attempt by the government to really ensure that there is no bubble in the market. Regulatory moves have been taken. Do you think market should welcome them rather than starting the blame game?
So, it's always difficult to see what is the right thing when we are in the midst of it. There will be people who were enjoying this false rally in low floating stock, and when prices correct, they lose money and they will blame the regulator. Oh, you should not have intervened. But do remember, Nikunj bhai, that cost of creating a bubble and cleaning the bubble is far, far higher than pricking the bubble at the beginning. On one side, we had regulator like Alan Greenspan who said, I don't know where the bubble will be built, and I will clean it up after bubble has been busted by market forces. Now we have seen what has that done to US markets. For a while, market presumed they had a Alan Greenspan put, and hence there will be no downward correction. So we have to really trust the judgment of regulators. They know what is the right thing, and they are probably giving bitter medicine because they want our market and our economy to be healthy.
My next question is, small cap stocks have corrected. Price always, money always changes performance. Suddenly what we're looking at like great returns will start looking like average and better than average returns. What are the chances that after the recent rout in small and mid cap stocks, the flows into small and mid cap funds could stall? Few AMCs have already started reducing exposure to small and mid cap stocks. Few AMCs have already they are not taking fresh inflows into small and mid cap stocks. Could we be at a liquidity vacuum for some of these stocks?
So again, at a price, there is always liquidity. And as AMC, we are trying to caution our investors and ensuring that they come with right expectations. Time immemorial, it has been seen that mutual funds return and investors' return widely differ as investors continue to chase performance rather than stay invested. Last year was 1 2 3 market. Large caps gave about 30% return, mid and small cap about 60%, and micro cap about 90%. Now, normally, Nikunj bhai, this is 5 6 years return rather than 1 year's return. But that's the nature of the beast. Market doesn't move linearly. Now, clearly, investors who are coming into small and mid cap fund should not expect what happened last year will be repeated in next 1 year or 2 year or 3 year. It is likely that returns from here will moderate. They should also not expect a straight line like this. There will be ups and downs. So we are trying as asset management company to caution our investors and bring them with the right mindset. Be a long-term investor, be ready for volatility, moderate your expectation. Certainly then small and mid cap can also deliver return to you.
You know, Nilesh bhai, you said 1 2 ka 3. The problem with 1 2 ka 3 is that the next line is 4 2 ka 1. So if you don't sell right now, what are the chances that you may actually not benefit from this surge in small and mid cap stocks? I mean, is it important to take some chips off the table? Either you move in large cap stocks or you move into some other instrument.
And then we call Lakhan.
Exactly.
So definitely that is what smart money is already doing in those low floating stock counter. And which is why we are seeing some companies where promoters are selling and retail shareholder is increasing. Now, undoubtedly, we have advocated to our clients to follow dharma of asset allocation. If you are leveraged into this market, please sell everything right now and reduce your leverage unless until you are exceptionally lucky or exceptionally skilled trader. If you are overweight into equity, this is time to book profit. In fact, Nikunj bhai, I am carrying one slide which I can't show right now, but this is what I've been communicating. If you were a brave person who bought during COVID period, then you can hold on to your positions because you know how to manage risk. If you were that conservative person who sold during COVID period, then please book a lot of profit over here. If you sold at 8,000, 9,000 Nifty, there's no shame in booking profit at 21,000 or 22,000 Nifty. And if you hold on to your portfolio, then don't be overweight equity as an asset class or small and mid cap as an asset class. And your fresh investment, please do via SIP and STP into large cap or large and mid cap fund.
Okay. Nilesh, just talking a little bit more about the way forward when it comes to the foreign institutional investors in light of the way our macros are placed, the fact that we've got the elections as well coming up, this capex boom, manufacturing renaissance, all of that. What's the outlook on the foreign institutional investors and pumping in the liquidity situation back home?
So if we see some of the institutional equity conferences which were held in the month of Jan, Feb, There were far more foreign investors' participation than we have seen before. There was a time when we were pushed by our friendly sell-side analyst or salesperson that can you fill this meeting because we are not getting enough audience. This time it was the reverse way. The friendly salespersons and research analysts were saying, look, we are already overcrowded. We'll arrange a meeting for you at a later date, but can you vacate the slot because I have to accommodate some other investors. So one, there is undoubtedly huge interest in India. Second, like local investors, global investors are also worried about valuation. There's no denial that they all want to invest in India. They just want to know what price they should invest. And the dilemma is real. India trades at premium to almost all major peers. It trades at a higher premium than its own average premium over major peers. And there are markets which are very cheap. Russia, obviously foreigners can't go there, but it's at 1/8 valuation of India. China is at 1/3 valuation of India. Brazil is at 1/2 valuation of India. Foreigners are in true dilemma. Sasta kharide ya sundar kharide. Indian market is expensive, but it has delivered return year after year, and there are better growth prospects. So we are seeing that's why a behavior where in the month of October, November, foreigners sold. In a Christmas holiday period of December, they bought more than what they sold in October and November. This duvidha dilemma of Sasta versus Sundar is pushing FPIs to behave in a slightly random behavior.
What to your mind in India is then Sasta Sundar Tikau. India में तो सस्ता सुंदर टिकाऊ चलता है, right?
Absolutely. I just pray that foreigners recognize that सोना सोने के भाव पे मिलेगा और पित्तल पित्तल के दाम पे मिलेगा.
So India Sona, China Pital. Can I say that?
I mean, as of today, yes. But on a serious note, Nikunj bhai,
About this question, I was not joking. I was very serious about that point. Why are you thinking it's a joke?
Well, your googlies I am unable to decipher. I can play straight delivery.
No, going by your latest tweet on the Manhattan real estate commercial prices as well, and given how it stacks up with India's or Mumbai's Manhattan, that's BKC, seems to like the bubble is here.
Well, it's also demand and supply. Undoubtedly, in a city like Mumbai, real estate is short in supply, especially of A-grade commercials, and which is why we are seeing prices running higher than NYC properties.
Well, Nilesh bhai, I really appreciate your time. Always nice to have you on ET now.